Hey guys, so in this particular video, I'm going to be diving into two main topics. One is how you can try to start to establish passive income in less than $1,000 investment. The second is more or less like where can you best place your $1,000 investment when it comes to choosing any sort of online tool or platform. So let me make sure that I get my screen recording started. All right, so one of the first things that I recommend when it comes to any online investment is to like do some sort of like research in terms of the company's history and whether it's like a brand new idea or like they've been out there for a while. The reason why this is important is because one, you've earned your money in like pretty hard ways and you kind of just don't want to risk it to lose it. At the end of the day, one thing with any investment is that you have to be open to losing it, but don't make the mistake of trusting some brand new company that hasn't really proved itself. So these are some of the companies that I've invested in. Are legitimate. They are old. They're as legitimate as an online company can get. So I guess just take my word for it that you can try to use these platforms. Of course, anything can happen. Any site, any company can get hacked, and so can your bank. So at the end of the day, this is as safe as it can get. The first one I actually want to review is I guess everyone's familiar with stocks, so let's go with that first. So we have Betterment. Betterment's an online platform where you can actually invest pretty much into your 401k. As you can see, I have like this retirement tab. I don't really use this as much. And then you can pretty much create your own projects or on your own saving goals, and you can call it whatever. This one's called Safety Net, and you can put in any amount of money you want. And basically, what they're doing with your money is they're either investing it in stocks or bonds or stocks and bonds, and you get to kind of select, how you want your pretty much investments to be allotted. So as you can see here, back in like I did a test. I basically invested $1,000 in four different ideas, and I wanted to see which one got the most amount of return. And quick spoiler, they're all pretty close. So it's at the end of the day, it's going to depend on which one you prefer, but I'll walk over each separately. So with Betterment, again, they're very similar to another app that I'm going to dive into. It's called Acorns, and what they do is that they pretty much invest your money into stocks or bonds. Um, with that being said, when I was doing and using Acorns as well as Betterment, I made sure that Betterment was um, more geared towards bonds than stocks, just because bonds tend to be more safer. So as I was doing more stocks in Acorns, I was taking more risk and I was willing to lose more money there. And I kind of wanted to see like which one's better in the long term. Is it something which is more safer? Is that going to give me more return, or something that's more riskier? So with that being said, this is essentially my portfolio. So I invested close to $1,000. Betterment has their fee. It's marginal. It's usually let's see, management fee like $1.24 over the last somewhat 6 months. So it's not bad, considering the fact that they've made me close to $37, of which $27 was due to market changes. So these are the increase in the bonds value themselves, and the $12 is dividends. So majority of the bonds, if you study bonds versus stocks, bonds typically tend to have a higher dividend. Dividends is more like, just think of it as like passive income that's coming into your bank account. You don't really have to sell your stock for that. It's just kind of like a reward for holding your money within a certain bond. Certain stocks have dividends as well. Like you can see, I have 40% in stocks. The rest 60% is in bonds. So bonds again tend to have more dividends. So here's just $12 of dividends, 27 in terms of market evaluation increase, and total of just $37.80. We can round it up to 40 if you want. This shows me a quick graph of like how that went up in terms of its net gain. So this is like a quick summary of like going down the route of choosing Betterment. Now I'm going to dive into Acorns, right? Which isn't that different. Let's just go with the last year because that's really where I invested my $1,000. And you can see, I don't know if they're gonna let me click, probably not. I made more here. I made $1,000. Well, I made $66 off my $1,000. So almost, I wouldn't say twice as much because Betterment was $37 and this is $66. But it's as almost twice. With that being said, my portfolio here is more in stocks than it is in bonds. If I remember, it's about 40%. About I would say 60% in large stocks and about 40% in bonds. So quite the reverse of Betterment. Here, of course, the $66 is the total value that those stocks are worth. It's not just purely dividends, so it's not like I'm getting money that's outside of the value of the stock. So if these stocks were to collapse, I pretty much have nothing, and the stocks can collapse. But with dividends, the money that's coming in, it's pretty much just staying there. If you reinvest it, of course, you're increasing the risk, but you can technically just keep it there. Yeah, that's Acorns. Again, you can go with either of these apps. Both of them have like almost the same amount of fee. But in terms of performance, I've seen Acorn to be usually more rewarding when it comes to Acorns versus Betterment. Again, all of these apps have a team of investors that are pretty much taking your money and investing in selling stocks, and they're kind of like taking a fee for that. So similar to stocks and bonds, right? You have what you call real estate stocks. So you pretty much invest in a portion of a real estate portfolio that a company owns. There are two out there. The one that I haven't invested in just because I couldn't get on their list is called Realty Mogul. But the one that I know of, or the one that's really easy to get into, is called Fundrise, right? So we're gonna dive into Fundrise right here. So this is essentially again $1,000 investment right around that like April May 6 month ago margin, and you can see that Fundrise only costed like or charged me 70 cents for investing $1,000 as opposed to Betterment, which almost charged me twice as much. But Fundrise made me more than Betterment, so they made me close to $41. But of course, subtracting their fee and yada yada yada, it eventually just boiled down to just another $41. What's interesting is that, again, with Fundrise, these are dividends, right? So there's no evaluation of stock that just goes up. So it's not like you're buying some brand or you're buying the valuation of a company. You're actually investing in real estate. So they're taking your money, they're putting it in actual real estate, and whatever money that they're able to get out of from that real estate, either by selling or by renting, they give you a portion based on how much you've invested. There are 3 plans that they have. One's called supplemental income. One of them is like, well, there's one geared towards more passive income. The other one's, which is dividends. The other one's geared more towards the overall evaluation of real estate, so things that they'll sell like 30 years down the road. And one is like a balance of both. So if you want some dividends and some overall capital gain on your real estate investments, that's the route. I wanted more passive income, so I ended up kind of going down the supplemental income plan. Again, as you can see, like close to, I think, what are they? That's I think that's a, what is it, 1,040? It's close to about 5% return, so still any more than what a bank can offer on their interest, which is, I think the max that you can get is 2% these days. Each of these ideas are giving close to about 5%, right? Now something very unorthodox, right, is Lending Club. Really, in Lending Club, what you're doing is you are investing. You're investing about. Hold on, let me just hide my personal details. Okay. Okay. Yeah. So with Lending Club, again, I invested $1,000, and what they're doing is that they're lending my money to other people, and those other people pretty much tell you what they want the money for, whether it's paying off student loan or buying a house or starting a business. And each person that you're lending money to, they're kind of telling you that they're going to give you X amount of, return on investment, because they're taking your money and investing in either their future, their bills, and whatnot. So here, if you can look at the return on investment, not only did my overall account value go from 1,000 to $1,053, so it definitely beats Betterment, it beats Fundrise, but it doesn't beat Acorns, which is again evaluation of the stocks. Um, but it also gave me almost like $100 separate in cash, which is available, right? And the reason why I'm not able to, typically you can reinvest that money in more and more loans to people to invest in their ideas, and they kind of keep repaying you back. But if you're targeting just passive income, this one outranks any other investment, right? Of course, there's a very classic route, like, terminology which is said, like, higher the risk, higher the investment. Here you're giving your money to people and they can just run away, they can just not pay you, and they're not liable for not paying you. It's just, yeah, they'll take a hit on their credit score and whatnot, but that's it. And there's very limited kind of accountability when it comes to people paying you back, so you are running into the risk that you may never see your $1,000 again. But again, the return on investment, it's amazing. It's actually more than 10% here. So the question that everyone's going to ask is like, okay, $1,000 makes sense. You've seen the results over the last 6 months. Um, what if you wanted to put $10,000? Like, where do you put that? I wouldn't recommend, going all in one particular app. I definitely recommend kind of diversifying your portfolio amongst all of these four different apps. If you have others, definitely diversify. Um, and you can keep more in one. Like, if I had $10,000, I would maybe keep $2,000 in Lending Club, and pretty much 1,000 in everyone else. Um, just because I think Lending Club is more risk. While yes, it's so far proving to be pretty outstanding, the risks are just too high. So yeah, these are pretty much the four passive income streams that I wanted to kind of discuss with you guys, and each of these take less than $1,000 to get started. Of course, $53 isn't going to pay your bills, over this course of 6 months. But the idea is that it's $53 more than what you had. So if you have money just sitting around and you don't really need it, and for sure, you know that you won't need it, it's worth putting it in any of these passive income ideas and just see what it returns. And yeah, that's it.